Nuclear stocks that could 10x before 2035. Right now, most investors are looking in the same direction. They are watching the same charts. They are following the same headlines. They are talking about the same stocks. NVIDIA, artificial intelligence, big tech, data centers, cloud computing. And to be clear, that focus is not irrational. NVIDIA has delivered extraordinary returns. AI is reshaping productivity, business models, and entire industries. Data center investment is accelerating at a pace we have not seen before. But here is the question almost no one is slowing down long enough to ask. What actually powers all of this? Not the software. Not the chips. Not the AI models running in the background. Electricity. Real, physical, continuous power. Because no matter how advanced the technology becomes, no matter how impressive the models are, nothing runs without energy. And not just any energy, but reliable, baseload electricity that works day and night, year after year, without interruption. This is where most investors stop thinking. And this is where the real story begins. Because when you stop focusing on individual stocks and start looking at systems, something very different comes into focus. When you stop asking which company is the most exciting, and instead ask which part of the system everything depends on, the picture changes. And once you see that picture clearly, it becomes very difficult to unsee. This video is about that shift. Not hype. Not short-term trades. But the underlying structure beneath AI, beneath tech, and beneath the next decade of global growth. And by the end of this video, you will understand why the next decade may not be defined by who builds the fastest chip, but by who controls the power that allows those chips to run at all. Before we go any further, a quick disclaimer. This video is for educational purposes only. It is not financial advice. Investing involves risk, so always do your own research before making any decisions. Now let's step back and look at the system. Every major technological shift in history has shared one common trait. It was limited not by ideas, but by infrastructure. Railroads needed steel. Factories needed electricity. The internet needed fiber. Artificial intelligence, whether investors acknowledge it or not, needs power. A lot of it, not occasionally, not intermittently, but constantly. If AI demand doubles, electricity demand does not increase in a straight line. It compounds. Data centers cannot power down when electricity is scarce. Cloud providers cannot pause inference workloads because the grid is stressed. Downtime is not an inconvenience. It is catastrophic. So when investors say AI is the future, the real question becomes this. What kind of energy can actually support that future? This is where nuclear energy quietly re-enters the conversation. As a practical solution to a very real problem. Nuclear energy is one of the few sources capable of delivering large-scale, continuous, carbon-free baseload power. It runs 24 hours a day. It does not depend on weather. It does not fluctuate with sunlight or wind. Once a nuclear reactor is operational, its output is remarkably stable. This is why, quietly, governments, utilities, and large energy buyers are revisiting nuclear. Not because it is fashionable, but because the math demands it. And markets, over time, always follow the math. To understand how this plays out, we need to break the nuclear ecosystem into stages. Because nuclear is not one industry. It is a system made up of multiple stages, each with its own dynamics. Stage 1. Fuel at the source. Everything starts with uranium. Uranium is the raw fuel that powers nuclear reactors. Without it, nothing else in the system matters. And uranium supply does not behave like oil or gas. It takes years, often decades, to bring new uranium supply online. Permitting is complex. Development is capital-intensive. Environmental approvals take time. For much of the past decade, uranium prices were too low to justify new investment. Mines were shut down. Projects were shelved. Production capacity disappeared. This created a structural supply gap. Even when prices rise, supply does not respond quickly. This is why uranium markets often feel quiet, and then suddenly tighten. Utilities do not buy uranium the way traders buy commodities. They secure long-term contracts. They plan years ahead. They prioritize security of supply over short-term price movements. This creates a lag between rising demand and visible market response. And lag is where mispricing lives. Now pause and think about this. If global electricity demand is rising, and nuclear remains part of the solution, uranium demand does not need to explode to create pressure. It only needs to increase modestly in a system that has been underinvested for years. This is why Stage 1 matters. But uranium alone is not the whole story. Stage 2, processing and control. Once uranium is mined, it cannot be used directly. It must be converted, enriched, fabricated into fuel assemblies. This part of the chain is highly specialized and tightly regulated. There are only a limited number of facilities globally that can perform these functions at scale. This creates bottlenecks. And bottlenecks are where leverage forms. Fuel processing is not just an industrial step. It is a strategic one. Governments care deeply about who controls enrichment capacity. Utilities care about long-term fuel availability. Geopolitics matters here. This is a stage many investors completely ignore. But it sits at the center of fuel security. And when demand rises faster than processing capacity, pricing power shifts. Stage 3, power generation and operators. This is the stage most people recognize. Reactor operators, utilities, power producers. These are the entities responsible for generating electricity and delivering it to the grid. For them, reliability matters more than almost anything else. A nuclear plant does not need to be the cheapest source of energy to be valuable. It needs to be predictable. In a world where power demand is rising and grids are strained, predictability becomes extremely valuable. Extending the life of existing plants is often cheaper and faster than building new capacity. This is why you are seeing renewed focus on plant life extensions and operational efficiency. When electricity becomes strategic, assets that deliver consistent output are revalued. Stage 4, capital and exposure. This is where investors enter the picture. Not everyone wants to analyze individual companies across the nuclear value chain. Many prefer diversified exposure. In the United States, two commonly referenced uranium ETFs are the Global X-Uranium ETF, ticker URA, and the Sprott Uranium Miners ETF, ticker URNM. These US-listed ETFs provide exposure to uranium miners and companies involved in the nuclear fuel cycle. For European investors, or those requiring a UCITS compliant structure, there is the Global X-Uranium UCITS ETF, ticker URNU. URNU is domiciled in Ireland and is listed on European exchanges. These are not endorsements or recommendations. They are examples of how investors access this theme. What matters is not the vehicle, but the direction of attention. Now let's reconnect this to technology. Because this is where the psychological shift happens. NVIDIA and AI stocks are not wrong. But they are incomplete. They sit on top of a physical system that must expand for them to grow. If electricity becomes constrained, the entire stack feels it. Chips without power are stranded assets. And this is why power, not software, becomes the real gatekeeper. Now imagine the year is 2035. AI is no longer experimental. It is infrastructure. Data centers are competing for power contracts. Utilities are prioritizing reliability over ideology. Governments are treating energy security as national security. In that environment, nuclear is not controversial. It is necessary. This is how re-rating happens. Slowly at first. Then suddenly. Not because investors fall in love with nuclear, but because the alternatives fail to scale. This is not about predicting exact returns. It is about understanding asymmetry. Small shifts in perception, when applied to constrained systems, can produce outsized outcomes over long periods of time. That is the opportunity. And that opportunity often exists long before it becomes obvious. This is why the nuclear conversation matters now, not later. Before consensus forms. Before headlines change. Before capital fully reallocates. If you have stayed with me this far, you already understand something many investors do not. The most important parts of a system are often the least discussed. And when attention eventually shifts, it moves quickly. As always, do your own research. Understand your risk tolerance. Think in systems, not headlines. And remember, the biggest opportunities often sit beneath the obvious ones. If this helped you think differently about energy and investing, like the video and subscribe for more long-form breakdowns like this. Thank you for watching.